Bitcoin bull market, crypto bull market is over. But what is the line in the sand? That's actually going to determine whether or not we are going into another crypto winter, a Bitcoin winter with downside price action for the next year. What is the line in the sand? What data points? I'm going to break those down for you right now in the next couple minutes. Looking at this chart right here, which breaks it down from Colin Talks Crypto, we have this basically this megaphone pattern, this broadening wedge, which I'm going to show you we've seen before, which previously has followed through in a bullish breakout trajectory. Is it going to happen again this time? The levels we're watching is currently, yes, we've dropped about 17, 18%, but we've done this before. 2017, we saw 11 different moves to the downside of 15% or greater. I think 8 of those were around 25 to 40% to the downside. So as it stands, nothing's out of the ordinary. So as we're looking for the drop, he suggests $98,000 could be that line in the sand. But what other data metrics are keeping up with that or supporting that narrative? First off, we have the 50-week simple moving average, which is about 350 days. We're also going to look at the 300-day moving average here in just a moment. But what is interesting about this is this trend line comes right up into the lower bound of this basically megaphone support level coming right into this territory. Similarly, we've got other data that suggests if we look at this chart, throw on the lines, we've got that megaphone right here. And we also have these previous range highs and those tops at the December of last year into the $109,000 top when we had that important date on January 20th. And look at this, we had a lot of chop through here and it perfectly lines up with this area that we're testing as we speak. Now I do have this red box outlined here in that 100,000 down to about $97,000 range. And I've also got this horizontal box. I just want to point out that for those of you that have been following along with the BitLab Academy streams, with Discover Crypto streams over the last couple of years, I had this box highlighted when the price hit about $74,000, watching for a rough estimate of when we'd likely get the breakout. And we ultimately had the breakout perfectly on course with where we outlined. Similarly, with what I'm seeing here, especially with the dates, especially with the Fed interest rates coming up, I'm looking for the price action in this time frame, ultimately, which we've just entered to be that determining factor. So we have the horizontal level of previous resistance, now support that we sliced through on that massive washout liquidation. We are currently testing it as we speak, and we're bouncing above this basically 300-day moving average right here. Now, why is the 300-day moving average or the 50-week moving average so important? Because when we look at the chart, it's not that it's just testing it right now. Zoom out, look back in time, all the way back to the start of this bull run, breaking out, finding support, little deviation, but support, small deviation. These have been slingshots to the upside. Yet again, we're doing that on the 300-day moving average. If we're looking at the 50-week moving average, similar setup here. Support, and yet again, are we going to find this as support, or is this going to be that ultimate doom signal for the breakdown? If we get out to the weekly and we go to the 50-week moving average, you can see we're testing that as well. So on both accounts, we're testing key levels of support on moving averages, also horizontal levels of support or resistance. And then of course, we have this broadening wedge that's coming right into the price action, into the territory. I think we're going to get that deciding factor. So what is the data we're looking at? First off, we've got finally a 22 reading, extreme fear in the market. The last time Bitcoin's price and the sentiment reached 22 was when the price was about $53,000. And if you'd remember, the price action here actually bounced at about $48,000, which was this previous range high of the ETF run up. But that 22 also ultimately resulted in a move of over doubling the price from 48 all the way up here to $109,000. So am I saying that we ultimately have to double from here? No, what I'm saying is when the market gets into extreme fear, that tends to be when the majority of the people get taken advantage of. And if the market reading shows fear and greed 22, that means the masses out there are very scared and ultimately are not looking for opportunities like I know you are. I know I am. But I'm curious, are you bullish here? Are you looking for opportunities? Are you de-risking? Are you getting out of the market? What do you think is going to happen? Drop a comment down below. But we have a couple other things that we want to look at. Ultimately here, the capital flow. money going into the asset class of Bitcoin or coming out. And I want you just to notice when we actually entered a bear market, we had a pretty deep dip and then a very persistent dip in capital flow here. Similarly, in the 2017 crash here, this was marked also by a massive outflow very early in that bear run. Similarly, right here, we had that sort of mini dip, mini bear run that trapped everybody, ultimately came back up, but very large outflow that, that was a part of that rundown. Now, when we're looking over here at the price action as we see it, capital flow is not even touching the zero line. It's not even near it at the moment. And in fact, we've got a lot of room to go before we would ultimately see that. So coming back to that chart from Colin Talks Crypto, we haven't even tested that range down in this zone, that 50-week moving average, also the 300-day moving average. That we're testing right into the previous range support and also all of this chop zone. So I'd ultimately ask you all to be a little bit more patient. And the last chart I wanted to share you is this. We can also gain a lot of information and data about the transactions, transaction volume, and also weigh that against the market cap and the value in Bitcoin as an asset class, which is going to be a pretty big determining factor what happens in crypto more broadly. And what we're noticing here is when this NVT signal, and again, you can scroll down here on Bitcoin Magazine Pro. I believe this is a free chart. It may not be, but I'm sharing it here with you. The NVT signal takes the total value of the Bitcoin network, basically the market cap, and divides it by the 90-day moving average of daily transaction volume. Much like I showed you on the Discover Crypto Afternoon show, we saw a 66% reduction in the size, especially coming from whales in an activity and transaction volume. So there's a little bit of softening of stance right now. But what does that mean in terms of price action? Well, we see when this MVT came into the lower bounds here of these standard deviations, this ultimately proved to be a massive slingshot up. We came back down here again. This is back the last time we saw that 22 read on the fear and greed, where extreme fear, we bounced down here and ultimately doubled in price. We got it again right here where we had the sell-off, the tariff war sell-off. Oh my God, it's over. Went from 109 to 74. We got the signal, boom, pushed up. And here we are again on the lower bounds. It does look like we have a little bit more room that we could go to the downside. But ultimately, I'm still looking at the landscape, at the Fed interest rate cuts, at the 40% increase in corporate stacking in the last 3 months. And people are worried right now because we're in a 17, 18% correction. I would caution you here, we very well could go a bit deeper. We could go 30, 40%. And it's ultimately, I think, going to trap a lot of people that think the 4-year cycle is absolute. It has to happen. And in fact, I think we will get some dips, whether it's this one that persists to the end of the year or even another pump up and a sell off that really convinces people we're having that 4-year cycle play out. And they're going to look for a lot lower prices that never come. I personally believe, I'm curious what you think, that we are going to see some shakeouts into the rest of this year. I think we're still going to hit a new all-time high this year. I think the alts are still going to have a chance to run, but I think 2026 is going to be the year that's going to melt everybody's faces. Make sure you lock in. Drop your comment down below. Do you think the 4-year cycle is going to play out? Do you think this is a buying opportunity? Are you de-risking? There's no wrong answers here. Let's learn together. Let's grow together. A rising tide raises all ships. I'll see you in the next one.